Yeah, I mean, it's a very important question. They should have launched the mini car. They were supposed to have launched that, or at least made the decision to launch that in 19, and they punted, ostensibly because it would have been gross margin dilutive. Well, look at margins now, right? And then, India, they hemmed and hawed, from what I understand, about entering that market. So Times of India has confirmed there's a 500,000 unit facility that's going to get built. Musk has got to start making more noise about that. These are big structural challenges. That if he wants to be the player with his 20 million units that he dreams about, I don't endorse that number, but to start getting there, he's going to have to do a lot better job internationally, and then as far as diversity of offering.
And so for all of the different kind of hats that Elon Musk wears over this time, you're talking about more kind of considered price cuts potentially, especially within China, to try and retain the consumer mindset in that region, which is shifting more nationalistic, if you will. And then additionally, you got to think about where within the productions that they brought online, where do they scale that back, as some of the other U.S. automakers have had to do as well with their own operations to try and satisfy some of the more international ambitions that they do have in their EV targets that they've set forth?
I don't see a lot of scaling back of manufacturing per se. Okay. I think, the idea of maybe Shanghai going to 3 million units, we should consider that on hold. Shanghai will probably look to optimize its utilization at that facility. I think we should really look at, India. I think we should look at Mexico and potentially Canada. And how do they serve the North American customer more profitably? Yeah. Those, I think, are the most important questions.
So that guy you just listened to, he has an $85 price target on Tesla with a hold rating. I did not play that clip because I agree with what he says. Actually, I completely disagree with like 90% of what he says, but I agree with Tesla needs to focus on India and Mexico on producing a lower priced vehicle. And I'll be damned. Well, you know what's coming this week, right? Well, according to Gary Black, it is the announcement of the Indian factory. I believe this will start to shift even some of your most bearish analysts into a more favorable outlook for Tesla stock. At the bare minimum, you got to start raising your price target, right? From $85, you got to up that if Tesla follows through with exactly what he's asking for. Craig Irwin says Tesla needs to be more vocal about their plans of a factory in India. This could be coming shortly. And what could this mean for Tesla stock? We have all of that and much more here in this video. We will discuss what Wall Street is saying about our markets, and some of this information might just shock you. First up, with some news that was not discussed earlier today, it seems like this kind of flew under the radar in the community. It is the first week of vehicle registration numbers out of China, and they're actually pretty dang good. Face value, you might think this number is very low at 3,200 insured units in China. But when you compare this number to 2023, that's actually up sizably from the first week of Q1 in 2023, when you only had 2,110 vehicles registered in China. Even Gary Black said on X, no clear reason why Tesla was weak today, down about 2.8% versus the NDX, down negative 0.1%. China weekly insurance registrations were 3,200, which is respectable. 220% quarter over quarter, plus 52% year over year growth. Always low the first week of the quarter, since emphasis is on exports to Europe. Maybe investors feel other mega caps offer better upside/downside and worried about what Elon might say on the earnings call. Still, India new factory announcement this week should be viewed positively. So Gary Black believes we are going to get the announcement for the Indian factory this week. That would be great news for Tesla stock, potentially another big catalyst, especially if this announcement is on Thursday. Well, that's when the CPI report comes out, and I expect the CPI report will be a good one. So mix these two together, Tesla could be setting up for a pretty big day on Thursday, but we might get the announcement tomorrow or even on Friday as well. So this article that was posted on January 2nd says Elon Musk's Tesla to set up first Indian manufacturing plant in Gujarat, according to this report. Now, it did not provide a specific date on when this could be announced, but it does say right here that in 2003, the vibrant Gujarat Global Summit was conceptualized, and the 10th edition will be held In January of 2024, it will celebrate 20 years of vibrant Jurat as the summit of success. Now, it's widely anticipated that this will be announced during this summit. This is where the factory will actually be produced or built as well. Jurat, I don't know if I'm saying that right. That's my best guess. But come to find out, the summit starts on January 10th, and Prime Minister Modi is going to kick off that celebration, if you will, the summit. So really from tomorrow through Friday, any time now you could get that announcement from Elon Musk. Back to what Gary Black says, he says it's the most important driver of Tesla stock is some sign that auto gross margins have clearly bottomed. Tesla's Q3 auto gross margins were 16.3%. I expect them to bottom at 16% in Q4 and expand to 17.2% in 2024. I believe we might be pleasantly surprised by Q4 auto gross margins. They might actually come in unchanged from last quarter, or even potentially like 16.5%, which would be very good news for Tesla stock investors. And I do think in 2024, if Tesla is able to raise prices because let's say rates do fall, 10-year treasuries fall, and maybe the economic outlook is okay, Tesla can start raising prices even a little bit. $1,000 of a price raise now, it's going to be $1,000 of essentially profits, right? Or additional accretive margins. I think margins could go 18, 19, 20%, just depending on the size and scale of rate cuts and how well the consumer is doing. But specifically, this Indian factory is vitally important for addressing the total addressable market of the world and electric vehicles. Let's be honest. It's surprising. It's truly surprising that Tesla does so well in China. When you look at Tesla's average selling price of over $40,000 in China compared to the average selling price of other vehicles in China being like $25,000, it's incredible that Tesla sells so well in China. It's a premium product. It's a premium to basically anything else you can buy on the markets. But if we can get a lower priced variant for, let's say, India, Bangladesh, maybe parts of China, maybe other countries as well, the entirety of South America or the Middle East more broadly, that's going to be great news for getting Tesla to 20 million total units, which is Tesla's own target by 2030. That only happens if Tesla opens more factories and gets a move on as far as making these factories. 20 million cars are not going to build themselves. Tesla probably needs 5 to 10 more gigafactories to reach that number annually. The son of Wolke, I'm not sure if I'm saying that right, apologies if I'm butchering that. He says Tesla Giga Mexico expected to start construction in Q1 2024. He does also point out that this is needed to achieve 50% growth. Pretty soon, if we can get Giga Mexico up and running, if we can get India up and running, expansions to Berlin and Shanghai, you're going to be pushing 50% growth rates again. And that's ultimately fantastic news for Tesla stock investors, especially if these lower priced cars, they're going to have lower or smaller battery packs. They're going to have maybe some undesirable features for us in developed countries, but for third world countries, these are going to be fantastic vehicles. It's going to be the best bang for your buck, if you will. This news about Giga Mexico expected to start construction in Q1 2024 comes from this. So this article from Teslarati says Tesla Giga Mexico groundbreaking ceremony schedule speculation start. So we don't know exactly for sure. But where this comes from, I read this whole article, so let me just skip down here. It says Sergio Resendez, the general director of real estate company Colliers, believes Tesla will not break ground on Giga Mexico until after the elections. Mexico's general elections are scheduled for Sunday, June 2nd, 2024. He says this is impactful because it implies that the authorities go when the electoral ban is coming, and it will be difficult for both federal, state, and local authorities to attend a ceremony to lay the first stone of Tesla's plant, the general director said. He believes it's unlikely Tesla's Giga Mexico groundbreaking ceremony will happen in the first half of 2024 at all. But The governor of Nuevo Leon, Samuel Garcia, doesn't agree with that. He speculates that Tesla will hold a groundbreaking ceremony for Giga Mexico in the first quarter of 2024. He says, quote, "I don't know the information, but I do know that Tesla is not guided by electoral issues. They are all over the world. They are always in a hurry," said the governor of Nuevo Leon. So we'll see ultimately what happens with that. I think Elon made it pretty clear as well. He does want a better general feel of how the economy is doing. He don't want to rush into Giga Mexico construction blindfolded. I believe those were almost his exact words he used on one of the last earnings calls. So we'll see, but this would also be some pretty great news if we can get India and Mexico running. Sure, it's not going to exactly help margins in 2024, but I'll take that. Sacrifice my 20% margins or 19 or 18% margins. 17% margins are fine. If you're going to give us 2 factories you start construction on, I'll take that any day over a little bit higher margins here in the near term. That's because the bigger picture is we want Tesla to produce vehicles. Margins are fantastic. They're great. But you want vehicles to be able to be produced, ultimately. That's what's going to drive substantial shareholder returns in the years to come. So I do think any day this week, you can get the Indian factory that is likely to be announced. Now, if that happens tomorrow, maybe you get a smaller reaction than if it happens on Thursday, if we get a beat to CPI. I just have a general feeling it's probably going to happen on Thursday, which would probably be like Wednesday night. So we'll see, because they're on the other side of the world. We'll see if it happens on Thursday, as I expect. When you do get a positive CPI report, as I expect, then I think Tesla stock could easily be up 5%, maybe even higher, based on this Indian factory. Because probably pretty quickly you're going to see a lot of bearish analysts start to get a lot more constructive on Tesla following that announcement. Let me know what you guys think down below in the comment section. In other news, it looks like China is quite likely to cut its lending rates on Monday. But to the bear's point, the Druckenmiller recession proxy, it's basically a year-over-year performance of cyclicals versus the S&P 500. Cyclicals are cyclically inclined to the economy, so they tend to, what some people argue, be a gauge to what's going on, versus the S&P 500, which is, and probably always will be, very much lean towards the largest companies in the US, which are not as interest rate sensitive most of the time throughout history, right? Typically, when you go under this black line, when you go negative, you tend to see a recession, and then followed by an outperformance of cyclicals. It basically happens every single time, and at some of the lowest points now we have seen since 2009. You're actually, at one point, you were lower than that. And so what tends to happen from here is an outperformance of cyclicals as you do actually go into a recession. Whether or not that recession actually comes is yet to be materialized. Nick Timmerhouse points out, despite a jump in interest rates during the third quarter, household debt obligations as a share of personal income was little changed and stood at or below levels of 1 year earlier. This is something I pointed out here on the channel as well recently, that even though rates are at some of the highest points they've been at in a long time, the debt service amounts as a percentage of disposable personal income are still at, below pre-pandemic levels. So households seem to be in an okay position still. Personally, I don't think much about this, because when you look at recessions over the past 20 or 30 years now, in more recent times, there's always been a central catalyst that has caused that. If the Fed hadn't been so quick to bail out the banks in March, April of 2023, we had a banking crisis for like 5 minutes. That could have caused a recession. But in fact, that has went away. And unless there is some larger conflict somewhere in the world, oil price shock or something else, I just don't personally see the economy slowly walking into a recession. That just doesn't happen in recent times anymore. You have the dot-com bubble, you have the great financial crisis, you have the Rona, and That's basically it. In the last 20 plus years, that's it. There's been no other recessions besides those three, and they've all had a central catalyst. Ryan Dietrich points out the first 5 days of 2024 finished barely in the red at down 0.1%. Here are all 26 previous times that has happened. He says overall a potential concern, but we are still optimistic after a 9-week win streak. This was normal weakness. So I think this would have been a little bit different if we had not rallied so aggressively in the last 60 days of 2023. I think without that rally, if we kind of traded sideways or even just rallied a little bit, but not as aggressive, we probably would have been very green to start 2024. But here's the data. So in the calendar year ahead, if you are negative, then you tend to be positive only about 53.8% of the time. It looks like in median return could be about 1 to 2%. So not specifically great. And as you can see, most of the time it's just red across the board. If you're red the first 5 days of January, you tend to be red in January as well. You're only positive about 34.6% of the time. That's one of the more troubling statistics that there is on our markets right now. This could also be weighing on the markets a little bit as well. JP Morgan says, quote, renewed increases in global shipping costs may actually add to consumer price inflation over the next several months. Such an outcome would reinforce our expectation for progress on reducing global core CPI inflation to stall this year. Now, my personal belief is from what you're hearing on conference calls, companies are having a very hard time passing on cost to consumers right now. So companies, unfortunately, are going to have to, take it in the arse, in regards to margins for most companies due to the increase of global shipping costs. I don't think they're going to be able to pass those costs on to consumers. So this might be reflected in PPI, but not in CPI. Remember, PPI is producer price index or producer price inflation. CPI is consumer price index or consumer price inflation. And to the contrary of what JP Morgan just said, to some degree, JP Morgan says, quote, this is the first Fed tightening cycle where we saw corporate profits increase and net interest expense decrease. This suggests that profitability will hold up better than in previous cycles and may mean an increases in unemployment are more gradual. If you guys want to see all of these charts and analyst opinions, Tesla stock news, go ahead and follow the Michael Tyler X account to see it over there first. Now, this one is actually very interesting. I'll go ahead and repost that. Expectations for higher stock prices 12 months from now is still historically low, especially when you consider stocks are near all-time highs. This data is from the New York Fed itself. So you're higher now than, I guess you're kind of similar to the start of 2023. You're also pretty similar to around the beginning of 2022. But based on what you've seen historically in the past, you're down here at like 30, if I were to guess, like 38% here. You were pretty consistently above 40% for most of history. Besides what you've seen more recently. So this is actually pretty interesting. This could suggest stocks could still rally quite a lot in 2024. I think whether or not stocks do well in 2024, really bottom line comes down to, does inflation fall faster than we expect? If so, that's very positive. Number 2, does the economy avoid a recession? That's the trickiest part because in recent history, again, we don't just typically walk into recessions, we typically crash into recessions. Like, figuratively speaking, not the markets, but we tend to crash into some kind of black swan event that causes a recession. I could argue that was the banking crisis, but due to the Fed's early policies, that may have avoided a recession. It's hard to sit here and just say we're going to walk into a recession. I just don't personally buy that. But we'll see. This time could be different. Infamous last words. Let me know what you think down below in the comment section. I more recently ran a poll here on YouTube. I almost said X. I ran one over there as well. On YouTube, it says, Tesla stock's number one potential problem in 2024 is a recession. And you have yes recession or no recession. It's a pretty simple poll. I just wanted to keep it simple, straightforward. I'm actually surprised. 51% of you guys said yes recession. 49% said no recession. So most of you guys are actually in the recession camp. So most of you guys probably assume Tesla stock's not going to do much in 2024. So let me know what you think down below in the comment section. Personally, if we go into recession in 2024, it's not going to be a V-shaped recovery. It's not going to be something that is like COVID or anything we've seen in recent times. So it would be way slower and gradual than what you've seen in the past. That likely means, in my opinion, Tesla stock closes 2024 in the low 200s. Probably lower than where we are now. I'm sure we get that initial sell down, maybe down to the 140s, 150s, and then a gradual increase to end the year around 200. That would be my expectation if we head into recession. I've been very clear on that. If we avoid a recession, Tesla stock could hit $450 or higher, depending on what catalysts are announced. But a recession is going to take precedence over anything else that Tesla does specifically. Let me know what you guys think. This vote did have 711 votes. So it does have a pretty sizable pool of you guys that did participate in that. Let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel. Thank you for watching. My name is Michael Tyler. If you guys want to come trade with us live in real time, we do have a couple new trades that were put on the markets today. Check that out. Link down below in the description of this video. So far, we're 1 for 1. On RXRX, we did hit a 300% trade, but unfortunately for us, or for me specifically, I cashed out at 300%. That trade ended up going 1,000% today, from $10 contracts into $100 a piece. Absolutely an insane trade over there. But you win some, you lose some. Sometimes you take profits too early. That's the name of the game. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.